Chart Watchers, and welcome to this Friday, May 25th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Happy Friday, everybody. Keep in mind, markets closed on Monday, so this will be the last show for a few days. Giving you a quick update, the Dow Jones Industrial Average down 39 points today. The S&P 500 down about 4.5. The NASDAQ actually outperforming, trying to break out to new fresh closing highs, up 20 points today, 74.45. The Russell 2000 also just kind of languishing near the flat line. 10-year Treasury yield down for about the fifth or sixth day in a row. You can see now down at 2.94%. Got a little bit lower. I think went down around 2.92 earlier today. And that is a reaction low that we saw back at the beginning of May. So I do think this is an area to really watch on the 10-year Treasury yield if that starts to turn back up. The winning streak that we've seen on utilities lately could be over. We'll talk about that in just a second. Volatility continues to drift lower. We are up slightly today, but it is below 13 and has continued to move down here over the past couple of months. Consumer staples and consumer discretionary, the consumer stocks, performing best today. Staples trying to get back through a key resistance level at 50. It was there earlier today. It's pulled back some. Consumer discretionary, though, continues to outperform wildly its staples counterparts. Utilities, which I mentioned, has been on this winning streak, kind of mirroring the decline on the 10-year Treasury yield, moving in opposite directions, of course. But that's 5-6 days in a row here that we've seen solid action on utilities, but we are nearing a key overhead resistance point. Energy having a really tough day today. I believe that there was some news out, and we'll talk about this in just a bit, about maybe a bit more supply coming to the market, and that has spooked a lot of energy traders. Crude oil has been hit hard, and energy shares, you can see, getting hit pretty hard as well. And then this is the life of holding into earnings reports. Foot Locker having an absolutely stunning day to the upside, up almost $7, trading at $53.35. But look on the other side, Gap, which had been trading up almost every day heading into their earnings report, stock down almost 14% today with earnings challenging 2-month lows. And with that, let me bring in my co-host, Erin. Happy Friday.
Yes, very happy Friday. I'm surprised your energy level isn't a little bit higher, because it's going to be a 3-day weekend.
Oh, my energy level is ready to go because we got game one of the Stanley Cup Finals coming up Monday night.
I know. Now we can really start getting into it. I know everybody's like, oh, when are the Stanley Cup Finals going to be over?
Oh, just let me bask in my glory here. It doesn't happen very often.
Exactly. I got to catch up with my Anaheim Angels. Oh, wait, the Los Angeles Angels of Anaheim.
I like the way they play around with those names.
Kind of ridiculous. But anyway, enough of that. Great weather. Should be a great 3-day weekend. I'm very excited.
Yeah, everybody gets a 3-day weekend, get a break from the market for an extra day. I mean, I love the market, but it's probably good that I get away for 3 days once in a while. So, but it's Memorial Day. I do want to thank all of our veterans, past and current, for their service. Really appreciate all you've done, and hopefully everybody out there has a safe 3-day weekend.
Absolutely, and thank you.
Yeah, that's right. You gave service, provided service for how many years?
8 years in the Air Force.
That's awesome.
Yeah,
Yes.
I worked on Star Wars. That was not the movie, obviously. I had a great time. So it was a good experience, but I like the stock market better.
I'd say it was more exciting, but I'm not sure I should say that. That probably isn't true.
All righty, well, let's get started. I think everybody's here now. So for our weekly schedule, Monday, obviously, as we've been talking about, is a Memorial Day, and we wish you all a happy one. And Tom's workshop is going to be on Tuesday. Do you have any idea what you're going to do it on yet, Tom?
No.
No. Okay. Well, it'll be a surprise. So Mark Chaikin is going to be here with us on Wednesday. Can't wait to talk to him again. And let's get on with today's agenda. So today, exciting day. We have Grayson from the mothership to talk to us about everything stock charts. We also will be doing, after that, an anatomy of a trade. I'm excited. I actually have a few that are in process that I'll talk to you about. 10 and 10 to 1. Hibbett Sports is going to be our first one, HIBB. And finally, I will be doing the sentiment update to finish off the program. And with that, pass back to you, Tom, for those technical headlines and news.
All right, sounds good. Yeah, I probably should have had my workshop topic. I wasn't even thinking that we wouldn't be here on Monday. So, because usually I try to announce it one day ahead, but we'll come up with something, and I'm sure it'll be, hopefully it'll be interesting for everybody. But talk about that more, I guess, on Tuesday, or maybe if I can come up with something between now and the end of the show, we'll see.
There you go.
Anyhow, 10-year Treasury yield. This is what I was talking about at the beginning. Down 6 days in a row, really, or I guess maybe it was up slightly this day, but 5 of the last 6 days, we have seen the 10-year Treasury yield declining. This morning, we had April durable goods out. It actually fell. They fell 1.7% versus a decline of 1.2% that was projected. But if we strip out the transports, April durable goods actually rose 0.9%, which beat the 0.6% that the market was expecting. And then at 10 a.m., May consumer sentiment came in a little weaker than expected, 98 versus 99. And you kind of put all that into pale, and this is kind of what we got. We got the 10-year Treasury yield moving down as money rotates into the bond market today. Couple of things, though, that's coming out of this is with this move to the downside in Treasury yields, it's actually giving those in utilities some relief. We've seen utilities moving up now for about the last 5 days. Really hadn't been performing very well, lost a trend line back earlier in May, and just hadn't been performing particularly well. And that's normally the case in a rising interest rate environment. So the pullback in the Treasury yield certainly helping those who are invested in utilities. The other group, another group that's been helped quite a bit here is the Reits. You can see the Reits also bouncing nicely over the last 5 or 6 days. These are two groups that tend to do really well when Treasury yields are falling because they are big dividend payers, and their dividends look much more attractive when bond yields are dropping. So you've got a couple of areas there bouncing, but all is not well everywhere. And energy really getting hit hard today. This was a big drop. I was looking for a 20-day test and then a bounce, but that was until we got the news out that Saudi Arabia and Russia are discussing plans to boost supply. And they're doing that perhaps to make up for shortfalls out of Iran and Venezuela. And as a result of that announcement, crude oil prices earlier were down. I think it was down below $69 a barrel last time I looked. And that was, we were over $72 a barrel. So it was pretty sizable decline. And you can see the XLE following suit to the downside. I'm going to annotate this because I really think that energy, I talked about it in my blog. First, obviously, that 20-day moving average was an area to keep in mind. But we had a lot of reaction lows. We had a flagpole followed by a flag and then a breakout on increasing volume. We really want to hold on to this low here. It's possible we hold on to gap support, but if that fails, I'd be looking maybe into the 72, 73 area to test this climbing 50-day moving average. So those are a couple areas to look for on energy. I don't think that this run is over by any stretch, but certainly the news this morning was not helping crude oil prices and, of course, energy following suit as well. A couple of areas within the consumer discretionary leading today. We talked last week, or actually we talked yesterday, I guess, about the XLY and a number of the industry groups that are really looking good, either breaking out or just getting ready to break out. Found it interesting today that consumer discretionary being led by two of the weakest industry groups. So let's pull those charts up and take a look. We've got home construction. This is the leader today. You can see up 2.71%, trying to get back through its 20-day moving average. We'll see at the close if we can get there. But this could be a little head fake to the downside. I'm going to annotate this. I think it's pretty clear that we had some, relatively strong support. You come across here at about 800. We had multiple tests where we had held at 800. We came down. We failed at 800, went back up, tested that area, and came back down, put in a double bottom. And now we're trying to get back up through the 800 level and to clear the 20-day moving average. That would be a pretty good start. And what we see a lot of times in a bull market, when we do have weakness, they're head fakes to the downside. and talked about the truckers. I'm going to come back and talk about one other area in consumer discretionary in just a second, but I wanted to show you this chart on the truckers, because if you look across here, you'll see we had multiple tests of support around 780 to 790, and we broke down only to come charging back to the upside on the truckers. So when you go back and you look at that home construction chart, is this a true breakdown, or is it just a temporary false breakdown where home construction is ready to make another move to the upside? No doubt that the lower Treasury yields are helping home construction. This is another group, with the exception of this one down day. It's been up most of the last week, week and a half, and that's been coinciding with the Treasury yields pulling back. Of course, the yields rising. Anytime you see the 10-year Treasury yield rising, you at least have to give kind of a second look at the home construction stocks, because 10-year Treasury yield tends to mirror mortgage rates. And so as that rises, it makes it a little bit more expensive for folks to buy homes. So anyway, home construction can take a cue from those short-term moves in Treasury yields. The other consumer discretionary group that I wanted to mention was the recreational services. Again, like home construction, just been under a lot of pressure. Today, it's getting a little bit of a bounce. I think it needs to get through about 144, though, before I would feel like it's got maybe a sustainable type of a move back to the upside. And right now, we're only challenging short-term resistance. Looks like we're still in a range of about 138 or 139 to the downside, maybe 144 to the top side. Let's see whether or not this strength can build, whether or not we can clear 144 on a closing basis. A couple industry groups that I thought were worth mentioning in the healthcare space. Talked about healthcare providers a lot. I just wanted to mention that this inverse head and shoulder, I'm going to stretch this out to a year. I think you can see the pattern a lot better. You have to have a prior uptrend in play, and I think clearly we had that with the healthcare providers. Came back down, put in a left inverse left shoulder, neckline, inverse head, right side of the neckline, inverse right shoulder, and then just recently broke out. We came back down. We lost that price support area, but held the rising 20-day, and now we're seeing strength again in the healthcare providers area, going up almost 1% today. One of the big names in this space that I like is United Health, UNH. Talked about it. It's one of the best Dow performers during the month of May, and you can see May has been very strong again for United Health. It went right up to the price resistance, has pulled back. I'd watch this rising 20-day moving average. I expect it to hold, and I'd be looking for some higher prices down the road. A breakout above that 250 level, though, would be very bullish for UNH. Another industry group that is acting much better, this is the semiconductor space. And semiconductors had a beautiful run up, kind of sideways consolidated here for the past couple of weeks, but it is making a breakout now above the prior highs. And this is exactly what you want to see in an uptrending index or in an uptrending market. You've got the PPO strengthening. When we went sideways, consolidated, the PPO barely even pulled back. Now we're breaking out, PPO strengthening again. It's just telling us that that bullish price momentum is continuing to build. And in a consolidating market, you tend to just kind of go back and forth above and below the moving averages. But in a trending market, you tend to hold it. And so this is starting to look more and more like an uptrend here for the semiconductors. They seem to be wanting to push back up to about 3,700, 3,750 to test that March high. A breakout there would be very bullish. Looking at just a couple of the sectors very quickly, I'm going to pull up the XLV for healthcare. 84 is a big level. We gapped down back in mid-March, gone back up twice to 84, haven't been able to get through. So far, we're holding this rising 20-day, and we do have a golden cross. So if we can get back through $84, I think that would be bullish here. Taking a look at the XLK, this has been a very bullish chart, I think. Beautiful move up. PPO looking very strong. Sideways consolidation. We did get the breakout, or it looks like we're getting the breakout on the semis, but we haven't gotten the breakout above that high a couple of weeks ago in the overall technology space. But I think it's just a matter of time before we go up and challenge the 71 area that we hit back in March. XLI, industrials, beginning to gain some strength. We did clear the mid-April high just a week or so ago, pulled back. We've held on to gap support and that rising 20-day. So again, we're seeing a little bit of a strengthening here in the industrials. And finally, financials. They've been lagging of late, no doubt about it. We've gone back below the 20-day. I'd rather see a nice rally here and get back up above that 20-day moving average. The thing that's really hurting the financials right now has been that pullback in the 10-year Treasury yield from about 3.11% down to 2.94 or so. And with that, I'm going to bring in our good friend, Grayson Roze. Grayson, I apologize for not bringing you in the beginning of the show, but always great to have you on the show. And what do you got for us today?
Well, first off, I'm disappointed. Yeah, you forgot about me there at the beginning of the show. Tom, what was that?
I did forget about you.
I've been here in a couple of weeks, and you're already forgetting about me.
I know, a 3-day weekend. I had so much on my mind. Caps are in the Stanley Cup Finals. How Toronto finished out the year, by the way?
Oh, you had to bring that up, did you? Really?
Are they in the finals? I didn't look to see who the Caps were playing.
Oh man, you know what? That's it for the segment today, folks. Thanks for having me on. I'm gonna be out now. He shoved me out the door there.
I just couldn't help it, Grayson. I don't have a chance to bask in hockey glory very often. Okay, so and I don't think you've ever had that chance, though, have you?
It's been a while. It's been quite a while. A couple of my lifetimes, I think. But anyways, I'm excited to be here with you guys today. Thanks for having me on. Always look forward to these Everything Stock Charts segments. What? I'm getting a note here. What I wanted to run through today, this page gets covered a lot, but there's always so much here that I don't think you can cover it enough. And so what I wanted to do is run through what we call our members dashboard, and then actually show you some of the tips and tricks that I have, and actually show you the way that I use the dashboard. I do actively trade myself, and so I'm always watching the market throughout the day. That's a great thing about being part of StockCharts. I get to sit there on the site watching the charts all day long. So what I wanted to do is actually show you guys how I use the dashboard. So first off, for those of you looking at this page saying, wait a second, I've never seen that. I have no idea what I'm looking at. This is what we call our members dashboard. It's the first page you see when you log into your account. So if you're a free user, you're not going to see this page because you don't have an account to log into. But if you are a member, this is going to be the first page you see. A couple things to remember on this page. This panel over here is called the Control Center. It's going to tell you your service level right up at the top, and it's scrollable. So what we've done is we've just stacked a lot of our most important links and pages and resources and tools and all of that stuff. It's all stacked right here in the Control Center. And so you can scroll through that. You can jump to the Sharp Charts workbench. You can jump over to our market or our sector summary pages. You can jump to the scooter reports or the historical chart gallery. Tons and tons of stuff in here. The Control Center is really a great place to go to sort of navigate your way around the site. We've got the market overview panel here, which is, I want to note, updating constantly throughout the day as you're on this page. It doesn't take a page refresh to actually get new data on this. If you sit here for a couple seconds, you'll see that it's kind of ticking along as you go. It's always going to be updating. So that's key. The market overview panel lets you see what the markets are doing. That, for me, is the first thing that I want to know when I come to this page. When I log into my account, the first thing I want to know is, what are the markets doing? That's the most important thing for me. Next up, we've got this market movers panel here, and we've just got one of them. What I've done is I've actually set this page up right now as sort of the default. I'm showing it to you in the way that that you would see it for the first time if you logged into your account for the first time and you made no changes to the page. This is how it would look. So I'm going to show you here in just a second how you can actually expand upon this market movers panel in a really key way. We've got that here, and the key is that you've got a bunch of options. You've got a bunch of different things that you can choose from. Top 10 of different indexes, different markets. That's key. And then what you can actually do is jump between most active, percent up, percent down. That's what I want to see. So when I come to this page, I want to see what's the market doing. And then I want to see, green button. There we go. Oh, now I'm full screen. Okay, there we go. There we go. Sorry, I'm getting notes here from my my video production team. That's the benefit about being in the office. So anyways, what I want to see when I come to this page is, what is the market doing and what's moving the market? What are the individual stocks that are moving the market? So I've set this up to have top 10 of the Dow. Very simple question. What's moving the Dow? I've got the most active tab open there. And I can actually flip through and see what's kind of leading the Dow up, what's leading the Dow down. I usually leave it on the most active tab, but that allows me to see what is moving the Dow. As we scroll down here, we've got scans, we've got alerts, and we've got chart lists. Chart lists are arguably the most important part of becoming a StockCharts member. You can save charts into your account. You can organize those lists. Chart lists are huge. So when you come to this page for the very first time, this is how it's going to look for you. But there are a couple key sort of tweaks that you can make, customizations, modifications that you can make that I want to show you now. So we've got this preferences button up here, the little gears icon in the top right corner of the page. If you click that, you're going to get some options. Now, the two that you have unchecked sort of by default are additional data panels and chart list panels. So we'll run through both of those. First and foremost, additional data panels. If I check this and I hit update, now you'll see I have this other row of panels. And I've actually configured this for sort of the way that I like to watch the market. So again, I've got a broad market overview here. I can see, click through the major indices, what's happening sort of at a high level. Then I can see what's actually leading some of these indices. I can see what's leading the Dow. I've configured my next data panel to be the S&P 500, top 10 of the S&P 500. What's leading the S&P 500 is the question that I'm asking next. Obviously a larger group than just the Dow, just the 30 stocks in the Dow. So I want to see what's leading the S&P 500. Next up, I have scooters. I have scooters for the large cap group. I'm really interested in seeing what's sort of the positioning of those largest stocks in the market. Scooters, for those of you who don't know, is StockCharts technical rank. It's a very powerful sort of in-house ranking system that allows us to actually, from a technical perspective, rank all of the stocks in a group. And it spits out, using the same criteria, it spits out one number for each stock. So up here, we've got Netflix. You can actually hover over these symbols to get a little mini chart so you can see what's happening. But Netflix sitting there at 99.9, absolutely leading the scooters group. And the chart you can see looks beautiful. So what I want to see is, again, what's the market doing? What's leading the market? What's leading the Dow? What's leading the S&P 500? And then what are sort of the top stocks in the market? All of these stocks up here leading the scooter groups are going to be great charts. So I love to keep an eye on this stuff. Last up, I've added predefined alerts because this will give me some interesting sort of technical developments. They're sort of news headlines, if you will, from a technical perspective. So I like to keep an eye on the predefined alerts tab. Again, though, all of this is customizable. If you want to add the DP signals for different groups, you can add that in just one click. So this whole page is customizable, and it's going to save all of these layouts for you so that when you return to this page, it's going to be in the same configuration. So by going up to this Preferences tab, what we call the Preferences tab, you click those, you add additional data panels, and then you can customize the look of those. And it'll be saved there in just a really basic cookie in your browser. So the next time you come back to the page, it's not going to change. Now, chart list panels is another very similar concept, but with your chart lists. So if I click here, hit update, now you'll notice that I have these two panels here, one that says Lauriston and one that says stocking. So what we allow you to do is add two chart list sort of summary views to your dashboard, and you can choose whichever chart lists you want. So for me, for you wondering, what are these names? Lauriston is just kind of one of my nicknames for one of my portfolios. So these are actually things that I own. These are things that I'm currently trading. And I can choose by hitting, again, that little gears icon, I can select which chart list loads in here. So if I wanted to use a different chart list, maybe one of my market evaluation lists, I can actually choose which chart list is going to be sort of loaded in here. I can also choose what view I'm going to use. I can actually click in here and sort of dive into that chart list in just one click from there. But so what I've done is got a summary of the stuff that I own, and I can click through these and see what the things that I own are actually doing on that day. I've also added what I call the stocking list. So these are things that I'm sort of keeping a close eye on. I'm interested in trading. I like the charts. And I've added this stocking list here to my members dashboard so that as soon as I come to this page, again, from the top down, I've got what's the market doing, what's moving the market in a couple different ways, and then what are the things that I own doing, and what are the things that I'm thinking about owning doing. So I've got this really, really broad view, pretty much everything that I need to know in just one page. That's what makes this sort of the customizations on this page really, really powerful. So the last thing that I wanted to note as well is this chart lists panel. Now, a lot of people just come in here and they click one of their lists, or they choose something from the view as list, and they just kind of dive right in. But a couple things to note about this page. First off, if you ever need to delete multiple chart lists at once, you can do that really easily by hitting the edit button. And you'll see that these check boxes load over here on the left side. You can check a bunch of those, however many you want, and you can scroll down here. And as soon as you check one, you'll see that this delete button pops up. So that's a quick way to delete chart lists. That was actually a feature that we've had requests for a long time. So we added it when we redesigned this page about a year ago. And the other thing is this, another gears icon here. This is what we call your default chart list view. So you've got two ways to interact with your chart list here on the dashboard. You can go into each list, select the view as drop-down menu here, and you can choose whatever view you want. If you want to see a summary view, if you want to see 10 per page. But the other thing that you can do is click on the name, okay? If I click on the name, it's going to jump me right into this chart list. Now, if I go back to my members dashboard, I've set that up so that when I click the name, it automatically goes to summary view. You can change that depending on what view you prefer by clicking on this gears icon over here and then choosing your default view. Okay, so if you wanted to change it to 10 per page, I can hit that, hit save preferences. And now when I hit tier 1 watch list, now you'll see it loads as 10 per page instead of summary view. So again, easy ways for you to sort of customize stock charts to really fit the way that you want to use the site. It's not just, you know, out of the box, you got to use it this way. We've built a lot of customizations into this page that I hope you all are taking advantage of. So with that, I'm going to pop out unless there are any questions. I just wanted to run you guys through those customizations. It's a powerful page. I mean, I do truly come to this page. I spend a couple minutes just sort of browsing through it. Again, you know, you've got these mini charts that can pop up. You can really get a pretty in-depth view of what the market's doing and what the individual stocks that are moving the market are just by spending some time on this page. So,
hey, Grayson.
Yes.
First of all, very good recap. That is a page probably that most folks don't use enough of, myself included. But I got a couple questions for you.
Go for it.
First one, did you make a public admission at the open that you don't work during the day, that you're just trading?
Wait, Chip's not listening. Is he? He's off somewhere on vacation or something, right?
No, I think he was listening.
No, you know, it's a true benefit actually of working here. You know, I'm constantly running around the site, just, you know, for my normal job responsibilities, and I'm constantly stumbling across interesting charts. I'm reading, you know, blogs and stuff to see what you guys are writing about. It is a great aspect of my job. It actually makes trading actively a lot easier because I'm spending the whole day on stock charts anyways. So it's a great benefit.
All right. Another question, more serious question. We're actually going to have you on at some point in June, probably in a few weeks, as a guest, not as not with everything stock charts, but as a guest. I mean, you're an accomplished author. You do trade quite a bit. Can you give anybody, or can you give everyone out there maybe a little sneak preview of your trading style? What you know, how do you pick your stocks? And we're getting ready to go into an anatomy of trades. Maybe a shorter version of this question is, would you like to share an anatomy of a trade with anybody?
Sure. You know, for me, it's kind of a combination of a couple things. Here, I'll actually pull up a chart. I think that'll probably help us out here. This is a stock that I'm currently watching. I really like E-Trade. My trading style is kind of a combination of a couple of things. It's trend, it's relative strength, it's momentum, and money flow.
Hey, Grayson, can you make that chart a little bigger?
Sure, a little wider.
Yes, yeah. If you can fill the page up, I think that will help everyone.
1280.
There we go.
That's a little bit better.
Definitely.
So for me, everything is about, it starts with relative strength. I want to be in the top performing sectors of the market. I want to be in the top performing industry groups, top performing stocks. I want to own things that are leading. I like personally buying strength. I don't like trying to catch a falling knife. I think the great benefit about being an individual investor is that you can move quickly. You know, you're not a hedge fund that has to unload positions over weeks and months. It's not difficult to get out of a trade. If you see something turning around, you buy strength, and a strong stock stops going up, you can get out of it. So personally, I like buying strength. I like buying leadership. So I've actually got these, what I call relative strength panels across the top of all my charts, which when I'm looking at an individual stock, allow me to see sort of this complete view of its relative strength position. What I've got here at the top is E-Trade, the stock relative to, I use VTI, which represents the total market. So basically, how is E-Trade performing relative to the market? Obviously, you can see this is beautiful. I mean, it's outperforming the market by a huge, huge margin. Next up, E-Trade's in the financial sector. I like to say, okay, well, how is the financial sector that E-Trade belongs to performing relative to VTI? So I've got this panel. You can see that financials have been kind of losing their grip a little bit on the market, but we're strong for a long time. Still over a couple months here, about a year, still outperforming, but that trend is maybe reversing. But what I like to see is how is the stocks sector performing relative to the market? Next up, within each sector, you've got industry groups. The market's broken up into industry groups. So I like to say, okay, well, E-Trade, it belongs to the investment services industry group within the financial sector. So how is that industry group performing relative to the sector? So you can see here, outperformance. That's what I like to see. This is an industry group that is leading financials. Within that, sort of, again, another level down, I've got E-Trade relative to its industry group. So I get to actually see how is this performing relative to its industry group. And if all of these lines are moving up, we've got a bit of a downtrend here. But if all of these are moving up, what you've got is a stock that is outperforming the market, in a sector that's outperforming the market, in an industry group that's outperforming the market, and that stock is leading its industry group. If all those things are pointing up, that is incredible strength. So to me, I've kind of got these four factors here that I look at. And I mean, you'll notice it's above price for me. Relative strength is above price for me. I've got these panels up here, and it's the first thing that I look at anytime I pull up an individual stock. I do look at the PPO. I know, Tom, you used to be a heavy MACD guy, but it seems like you've kind of been pulled over to the PPO side.
Well, I mean, they're the same. They're the same thing. It's just
right.
The PPO is, compares percentage. So you can use the PPO and compare different stocks or indices. You can't do the MACD.
And I made that switch a little while ago. I used to use a MACD, but it's kind of switched.
Well, why didn't you guys switch to the PMO? Is what I'm at. I ask you.
How did I know that was coming, Erin? I knew it was coming.
It's so far superior, but I'm a little bit biased. What can I say? And when you're done, I do have a quick question for you. So
yeah, sure. I'll finish up here because we got to move on. But next up for me is trend. I've got all these moving averages on my chart, and I like to look at trend. Strong trend, to me, there's nothing more powerful than strong trend, with the exception of relative strength, obviously. But trend is trend. I like to put that trend to work. Again, I'm not trying to sort of call a bottom or catch a falling knife or anything like that. I do look at volume pretty heavily. I actually rely a lot on balance volume. So maybe I'll talk about this a little bit more next month, but we'll kind of dive into this these indicators that I use a little bit more. But I use on balance volume a lot to kind of see a more zoomed in view of volume and money flow. I like to kind of see how those are working together. So, and then I use the scooters. The scooter is a beautiful indicator because it's the same criteria applied to all stocks in a group. So 99 is going to be better than 1.0, and we know that. And so it's a really quick filter. I can show you guys next month how I actually use the scooters to kind of filter things down really quickly. But
I have one final question before Erin asks you her question. That is, with a stock like this, how do you set your stop? I mean, it seems like maybe you've got a little bit more of a longer term view. But do you...
Yeah, I mean, I try to. It kind of varies. I don't. Tom, you'll probably cringe, but I don't actually set hard stops. I keep stops in mind. And again, the benefit for me, I have to preface this. It's a big disclaimer. I'm sitting on StockCharts all day long, and I'm clicking through the site, and I'm doing work and everything like that. But I'm also watching the market constantly throughout the day. And so if I see something starting to break down, I can very quickly move on that. So I've sort of got stops in mind. It's sort of varies by, this is a tough answer, but it kind of varies by chart. I actually use basic trend lines. I use moving averages to set stops. But, again, I'm kind of quick on the trigger. And so I'm not actually entering hard stops because with my broker, because I'm not leaving for 2 weeks and not looking at the market. I'm not worried about that. I'm kind of always watching things. Tom, I mean, I know you're the same. You're constantly watching the market. So
yeah, well, we're here every day. We have no choice.
Right. You're tied in. But we can dive into that a little more. I don't want to take up too much of the show, but we can dive into that a little more next month. So
yeah, the question was, and I think it's related to what you showed the very last thing, is so that you were showing how you can get your chart list to show every time as per page, or can you do that with Candle Glance?
Sure. Down here, if you want your default view to be the Candle Glance view, absolutely. Mine, again, is summary view, because I like to just see that sort of table layout. So if I click on this, it's going to be summary view. But if I go in here and I choose Candle Glance and I hit save, now you'll see when I pull this up, it's going to be Candle Glance. So if that's what you like the most, make it easy on yourself. Set that default view one time. And then every time you click on a chart list from the dashboard, it's going to be Candle Glance view or gallery view or whatever your sort of preference is.
And that was just the settings gear on the chart list.
Yep. We'll show that one more time. Another quick thing. Hit these buttons up here. They scroll you down really quick automatically, so you can scroll down to chart list. But yeah, this gear icon right there in the sort of top right of the chart list panel, you click that and it's going to launch this little window, and you can just select from this drop down menu whatever is best for you. So it's a great tip.
That was the one that I had.
Perfect.
Yeah.
All right, guys. Well, I will see you next month. That's exciting. I'll be back.
I know. That'll be great to have you.
You haven't had enough of me.
Never.
Definitely looking forward to it. Thanks, Grayson, for stopping by.
Yep. Have a good weekend, guys.
Great. You too. Okay. We are ready to move into the anatomy of a trade, and we haven't done this one in a little while.
I know.
So we probably got some things to share. I'm going to let you go ahead and take the screen first if you're ready.
Right. I'm ready. I'm going to show you 3, and there are actually 3 that are currently active for me as well.
Okay.
So they are intermediate term trades. So I'm just going to show everybody, where I am on them and what, oh, that got saved to the wrong list. So we'll start here. Voya, we've been talking about Voya. I think it was even requested as well for the 10 and 10. So hello, you guys get whoever requested it, you're going to get to see my take on it. So Voya, I got in, let's see, back here, I think all said and done with the fees, and it ended up at 54.70 is where I went in. So I caught the top. That was really good of me, but I'm still riding it. The reason I took it was, you can see I had just gotten the buy signal on the PMO, and it had just come above that previous top. We were getting all these confirmations, but really what hooked me was the fact we had this ascending triangle, and that was a breakout. Granted, not a decisive one or a real impressive one, but I thought based on what I was seeing here, high scooter, that this would be I should expect it to continue on up. So I got it, and right about the top. And, now we are seeing some deterioration on the PMO and on the volume here a bit. But once I'm in, I'm not going to pay that close of attention. I won't pay close attention to the PMO in terms of getting me out. So when I decide to make my trade, I immediately set my stop and my target. So I have not hit my stop. I actually have a fairly deep stop on this at about $51 to kind of coordinate. I didn't want to go all the way down to this tail down here, so I wanted to pick that closing price up there. So it's about $51. But with ascending triangles, you can actually calculate some targets. And so you look at the length of the pattern at the back, and that is about, I don't really pay attention to those percentages necessarily, but that is the depth of the price rise that I'm expecting with that breakout. So I'm expecting, oh goodness, 46 to 55. So I'm looking at about a $9 target. I mean, this is an intermediate trade, so I'm planning on being in it a while. And since my reward is fairly high on this one, I'm willing to take the risk down lower with a hard stop, actually set a hard stop at about 51. So that's one of the trades I'm going into. If we get the breakout, great. I'm going to just continue to ride it. I'm thinking the market's looking better at this point, and we did have some really good reasons to buy this one when we were talking about it earlier in the week, but last week. So I still thought it looked good. I'm staying in it. I'm really hopeful that we're going to get that breakout back above that the overhead resistance here at about, what is that, 54.50, 55. So that's what I'm looking for in this one. So I'm in it. And again, these are a bit longer term trades, because while I can be on the computer all day long watching the stock market, I generally don't spend that much time watching the market in general. So I'm not going to necessarily look for those stops. I've got predefined alerts that can tell me I can get online on my iPad or my iPhone, but I'm not necessarily glued to my computer screen. I just am not. So I like to set some hard stops, especially on my intermediate to long-term trades. I'll set the hard stops. Let's see the other ones I had. Whoops, not in there. Go back here. Okay, ARC. This is one that's been sort of up and down for me. I got in back here after the scoop in oversold territory of the PMO. It was rising nicely, had a nice move here, had gotten above the resistance at this low back in March. So I was liking the look of it. You can also see it coincided with that top back in December of 2017. So I got the breakout, liked it, still am holding it. I set my stop. Again, this is a longer term trade. So I am going to set my stop in a more deep way, because my expectation is a lot higher over time. The hard stop will be set lower. Trust me, I watch my investments. I really do. I pay attention. So I'm going to see if things are going really the wrong direction. But generally, you know, in this case, I let it ride. I got some of that profit up here as it came up, but certainly it's come down, but it didn't get to my stop at about 37.50. Came down here and held support at about 38.50. So I wasn't ready to dump it. And then I was watching as well the PMO. We had a higher low and a higher low on price. I got a buy signal come through, and it continued to rise. And so I was able to get back in. Up, you know, I didn't sell. I was still in it. And now we're seeing a lot of this consolidation, sort of similar to what we saw in the Voya chart. I'm feeling pretty good about it. I'm looking at this as a flag formation. So I'm looking for that upside of about, let's see, 38 to 44. So at least $6 on this rise right here. So I'm looking for a move to at least $50 in the intermediate term. So that's one that I'm holding on to. And you can see it's been really strong as far as the scooter. So, you know, Grayson was saying he likes to buy into strength. This is one of the ways I buy into strength. So that was that one. And then finally, let's see, did I save the other one? I don't know if I saved the other one, but GE, guys, I got in. And of course, I didn't get in at the best price at this point. Let's see, I got in at 13.14. So, you know, I guess it's not horrible. Could have been much worse, but that's not right. I did not get in at 13.14. I have to look that up because I know I didn't get in that low. Probably 14.14, probably in there. Well, I only just bought it, so it's up here. I know I'm down, definitely down on GE, but I'm holding it at this point. I still like the reverse head and shoulders here. I got a little bit nervous here when we lost the 50-day EMA, but we're now climbing back above it. You know, the volume's starting to pick up here. There's some more interest. It's just one of those ones I thought, you know, I'm just going to give it a shot. My stop on this one is was almost triggered. I'm at about 1380 is where my stop is set. So I haven't triggered it yet. Hoping we don't get there. Really looking for a price rise. The length of this reverse head and shoulders, which would be what, about 1250 to about 1550. So $3 run past that area of overhead resistance. So I'm looking for at least like the $18 range, somewhere in there, $19 range. So that's my upside potential here based on that chart pattern. So I'm willing to take a little bit of loss here on the intermediate term, but I'm not setting my stop so low that we're hitting these lows. I don't want that. I wanted it a little bit tighter toward these lows back here. You can see in the thumbnail. So those are my two anatomy of a trades, and I'll keep you guys posted. And when we have our next anatomy of a trade, I'll let you know what you think. So.
All right. I got a few here. So let me go ahead and grab the screen.
Oh, somebody asked me really quickly how to annotate that percentage bar. So I'm just going to, do I still have the screen?
Yes.
Okay. So it's right there in your annotation tool, the one that has the double A on it. You just go down here to percentage change, and then you can do, so here's a measurement. This is the measurement of that particular head and shoulders pattern. And so I can actually click it and then, get the other one. I can just put it on top, and that gives me the idea of around 18. So about $18. But honestly, when I look at where the resistance is, I'm looking for 19. And so that is that.
Okay. Let's go ahead and move. There were two of them I was going to share that I closed. One was a winner, one was the loser. But all of these stocks come off of my strong earnings chart list. So these were all companies that beat top and bottom line. Keys had made a huge run. You can see the heavy volume back in March, established a high and pulled back, went back up, challenged that high. And then when it pulled back down here, I had pretty solid support coming in just above 50. So I had gotten in back at the beginning of May, looking for a target up here just above 54. I actually hit that 3 or 4 days ago and was able to get out. So all I was doing was playing this trading range. So keys worked out beautifully. Now, they don't always work out this way. And by the way, when you go down, I don't want to spend too much time on it here, but like what Grayson was talking about, I really like to find stocks that are outperforming their peers, which you can see right here. Keys was doing pretty well for the past few months. And again, with this kind of volume coming in, suggests accumulation. So these are the types of stocks I like to get involved in. The other one, the one that did not work out so well for me, and I'm kind of kicking myself, but that's why I keep stops, is GKOS. They reported their earnings right here in the second week of May, gapped up with earnings and pulled back. And when it went below the 20-day moving average this day, it went down to 32 and change. I actually put in a stop buy. Instead of a stop sell, a stop buy, meaning that once it went back up and went through the 20-day moving average, I was going to get in. So that day it went back up above. A lot of times that'll mark a bottom and then the stock will take off. Well, in this case, it did not. It went back down, and I actually was watching this at the close and I did not want it to close below the 50-day, and you can see it closed barely below the 50-day, and I honored my stop. And now you can see it has made the move all the way back up to resistance, trying to make a breakout. So it was a good call. It's in a group that was doing pretty well. One of the reasons I was a little nervous is that you can see relative to its peers, this one had been underperforming. So I didn't want to get caught in something, that broke down. So I can't really look back. I mean, I had my stop. It didn't work out, and I got stopped out of that one. Current trades that I have right now, one is doing extremely well today. So I'll start with that one. And that is Roku. Roku is making a breakout finally. When it gapped up with earnings back here in the middle of the month, I bought when it came down and filled the gap. I like this huge gap up above this double top, and when it filled the gap, I bought the first time. The second time, and believe me, this was not a good feeling right here. I remember it pretty well. The stock was getting hit pretty hard, and I was like, well, I hope it's going to be recovery day. It turned out printing a really nice hammer, went down to this other gap support level and reversed. Now I've got a closing stop below 33.50 as my stop. I've still got it. And the reason, normally I would just take the profit here. Look at the volume. That was the reason I've continued to hold it. I think we're getting a major breakout here on Roku, and there's not a whole lot of resistance on this stock really until you get up to about 43. So I felt like this one had, now, if this one closes back below this candle body right here, let's say it closes 38, 38.10, something like that, I'll be out. So today is going to be a big day. Either I've got a breakout that I'm going to continue to stick with, or if I get that false breakout and close below, I'll take the profit and run on this one. Also, I did buy Voya, and Erin talked about this one, so I won't talk about it too long, but I bought it as well on the breakout. I did mention that if it failed to hold that breakout, I'd be watching this 20-day moving average. If it closes below the 20, I'm going to be watching it pretty closely. Volume is light. I don't have a stop in right now. I might set an intraday stop below yesterday's low because I did like that hammer. The thing that I really liked about Voya, if we go into a relative chart, is that it's in a not so great group, life insurance, but look at how it's been performing relative to life insurance, how it's been performing relative to the S&P 500. And even though life insurance has been weak, this is the area that I was feeling pretty good about, because when rates are rising, life insurance stocks tend to do very well. And rates have been pulling back, but because of the breakout that we saw recently in the Treasury yield here in the U.S. versus Germany, I think rates go higher. And that was thinking that, and I think I showed a correlation chart showing how the DJUSIL, which is life insurance index, has been performing very poorly and has not been correlating with that move higher. And I'm looking for a snapback rally in life insurance. And if it does that, I think you've got one of the strongest stocks within the space, given that it is trying to make this very bullish breakout in ascending triangle. Another one that's kind of just hanging right now is VRAY. This is a medical device company. I really like the space. Here was the earnings report. It came all the way back down. I was kind of just watching it to see if it would bottom, and it started to reverse back up. And I think I got in right at about $7 as it started to turn higher. And I'm going to keep a stop down below that 665 area. I think I actually have an intraday stop in play right now at 665, but I'm looking for this to get back through 725. And if it does, I think it could make a run back for 850. So I really like this one. Last one I wanted to share real quick, Garmin, GRMN. I looked at this and I didn't buy it here, and it was my pick, I think, for this week. It's showing a 20-day test 2 days ago. I got it that day, and I don't remember it going down to the 20-day. I think I ended up getting in at about 60.25. But I think it's going to make a run for not only 62, I think it's going to make a run back up here for 64, 64.5. I love that big volume gap up here. I like that gap fill. It looks to me like it's starting to turn back higher. So those were the ones, those last four that I currently own, and then two that I've closed out recently. So some are winners, some not so great. You get a little bit of both, but I do think remaining disciplined with your stops is critical to success in trading. So with that, let's go ahead and recap our anatomy of a trade. Erin showed you a few of her trades. I showed you about, I guess, quickly about 6 of mine. And so that's it. But it had been a while since we did this segment, so I think it was good timing there.
All right, let's see. Next up, wow, it's time for that 10 and 10. Are you ready?
I'm ready.
Okay, let's go ahead. I'm going to share the screen and we'll look at the RRG very quickly. We actually had about 38 requests today, and you can see a lot of them are strong. We're looking at about half of them showing a lot of strength, and this is just lagging a little bit, deterioration. So they're still, I would say, in the strong sector. So we'll take a look at those. The first one will be Hibbett Sports. Do vote by liking the symbol requests in the chat room. That's, of course, next to the right side of your viewer on the StockCharts TV tab. So I'll hand it back to you.
All right, sounds good.
Hibbett, H-I-B-B.
All right, I was just annotating this one, so you can go ahead and just see the final annotations here. Hibbett, the big problem with Hibbett is they reported earnings. And so I've got the numbers here. They missed on their top line, 274.7 million. Market was expecting 277.3 million, and they missed on their bottom line. It was only a penny, 112 versus 113, and you might say, "Wow, you missed by a penny and you go down 14%." But it's more about trust, I think, on Wall Street than anything else. This is why I like to trade companies that have beaten top and bottom line estimates, because I think once you come up short, I do think that there is a little, I don't know, maybe a little asterisk that Wall Street kind of places on you. And it's hard to rebuild that trust. So I don't like it because it lost, or it missed top line estimates. It missed bottom line estimates. And this is a really good reason why I don't like to hold stocks into earnings. Yes, you might miss the ones that, gap up and take off, but you have to be willing to accept this kind of risk. This stock did not look bad. I mean, it is in the retail space, which has been pretty strong. Technically, there didn't look like any warning signs coming. And then all of a sudden, stock's down 14% after reporting earnings and literally missing by 1 penny. So I'm just not a fan of holding into earnings. I think it's too risky. There may have been a little bit of warning. I circled these tails up here where it looked like we were breaking out, never could quite hold it. We did have a bearish engulfing candle earlier this week. But look at that volume coming in on this sell-off. I at this point, after missing top and bottom line and having this kind of reaction on heavy volume, I would leave it alone. I would not be looking at a HIB. I'd be avoiding it for at least the next few months.
All righty. The next one, the most popular one in the chat room at this point in time, is Micron, MU.
All right, Micron. Well, we're getting a nice move on the semis, and Micron's been very strong. And it is trying to make that break to 62. I think it was right back in here when they had come out with some, I think it was some good news here. I don't think that was their, maybe that was their earnings. No, I don't think it was their earnings. I forget. There was some kind of, maybe it was just a buy recommendation or something. But I pointed out then I thought it was going to go back to 62, and we've certainly gotten there. I believe we're going to go through. I think the semis are strengthening. Micron is one of the better stocks in the space. Beautiful uptrend in May. It's had a tremendous May. We started the month at 46. We're now at 62. That's $16. So we're talking about, what, 35% or so gain this month. A huge move, very strong volume, but we haven't gotten through yet. So for me, it's a short-term sell as a trader. And I would be hoping that we could get maybe back down close to 56 for a pullback, or I would re-enter on a breakout. But I do like the stock. I think it eventually is going higher.
Okay. Let's see. The next one we're going to do is Teva Pharmaceutical, TEVA.
Another one up challenging some resistance. So let's see whether or not we can get the breakout. It's one that I would be watching probably. Well, again, I'd probably take the money if I was trading it, just because you are up against major resistance. I look over at the volume. It's just kind of, maybe average. I don't know, maybe you hold on until the end of the day and see if it makes the breakout on the close and see if that volume picks up. But I would be prepared if it doesn't get the breakout today. I'd be prepared to take my profits short term and move on.
Okay. Next will be JEC, and that is Jacobs Engineering Heavy Construction. I think we talked about that yesterday.
Yeah, actually, I'm going to pull this one up on the relative chart because I agree. I think that this, I think it's a good one on a relative basis. You can see that the stock on a relative to its peers has made a breakout. So the overall group has been trending lower. We did make the breakout though. So this is one of the better stocks. And I think I talked about this group, this trend line that it's been struggling to get through. If it can get through, I think JEC becomes very tradable because it is one of the strongest stocks in the group. Otherwise, I would be looking maybe at the 20-day. If I'm just looking at the stock individually, 20-day moving average would be a buy. If it fails to hold the 20, I think you could be looking at the top of gap support around 60. But with that volume that came in on that gap up, I'd be really surprised if we go much below $60 down the road. So I think this is an improving stock, but it's just in a group that needs a little bit more love. Just unwanted group right now, but the individual stock looks good.
All right. I like this one on the RRG from the materials sector, FMC Corp. FMC is the symbol, specialty chemicals.
All right, FMC. Forgot to annotate that one, so I guess I should put some at least annotate that big support line. Okay, FMC. Do another one by the relative chart. Just taking a look here. The group is just kind of going sideways. We have seen some relative strength in the stock lately, but overall was really struggling. I got some mixed pictures here, and this group, is not going to be one of my favorites, but it is hitting a 20-day moving average, so it's got that going for it. I'd probably, if I had to do anything with the stock right now, it'd be a buy, simply because it has moved up nicely, and on this pullback, we are seeing a 20-day test, which I could keep a really tight stop. So reward to risk looks good. Here you can see we moved up, had a little bit of a flag, and then broke out, pretty decent volume on the breakout. So 88 provides a little bit of price support, and that 20-day moving average also at 88.02. So I'd be okay with with FMC here. Initial target, $92.50, $93. I think we could get back up there. So it would be a short-term trade for me. I'm mostly concerned about the group and just not being in one of the best sectors.
Okay. The next one is going to be, I think this one was our only consumer staple sector request, and that is Lamb Weston Holdings, LW.
Okay, yeah, this has been on my strong earnings chart list quite a bit. I think it's still on there, and it may have been based on this right here. I think that this was earnings related back in the first week of April. Cleared a major price resistance level, and it's really been off to the races. Here's the problem I have right now with LW. I wouldn't buy it, and it's because we had a breakout, but we had a breakout with a negative divergence. So you can see right there, lower PPO, and as you come across and you're hitting these highs, so you got prices rising, but the PPO falling. So it's just telling you the price momentum is slowing a little bit. The other thing, look at the volume on this. I like to corroborate these signals of slowing price momentum because this doesn't take into account volume. So if the volume is saying the same thing, and I think that breakout right there, you can see the volume is much less than what we saw on this rally back in April. So I think it's definitely pointing to slowing momentum. I think we're going to get a 50-day test, and I would be looking maybe there for price support and then this rising 50-day. Anytime I have a negative divergence, I look for a PPO centerline test and a 50-day test. So I don't think we're there yet. I think we're going to see some more weakness ahead. But as we get down closer to the $63, $64 level, I think it begins to look much more interesting.
Okay. The next one is ServiceNow, and its symbol is NOW, N-O-W. Is now the time to buy? Now?
I wouldn't be a buyer here, but I do like the chart. We clearly have major support back in the 156 area, 56-ish. You can see multiple tests right there, going back really to the beginning of March, then again late March, early April, and then again late April. So 156 to the downside, to top side, the recent high, a little over 180. I think this is our trading range, and this is why I don't like buying it here, is that no guarantees we're going through 181 anytime soon. So it gives us about $5 to the upside. And if I'm using this as my major support level, I got about $20 to the downside. That's 4-to-1 risk versus reward. I don't like that kind of setup. I like the stock, but again, it would be something that I would include maybe in a watch list and wait until I either get the breakout or until I get to a point on the chart where I just have a much better reward to risk setup.
Okay. Let's see, the next one is an ETF, the Spider Oil and Gas Exploration ETF, XOP.
Yeah, I'm sure. Yeah, it's getting hit like the overall market. I do think that you're going to probably have a support range between 38 and 40. 40 was that prior high over here back in January. We did break through it with some pretty nice volume here. And prior to that, we had a lot of lows coming in right about 38, and it's also the 50-day moving average. So we're bouncing off of a key support area. I think that's good. But if we lose it, it's possible we could go to 38. So if I was looking to get into the XOP, I'd probably do it in stages. to just minimize my risk a little bit. Maybe an entry at the current price. And if we happen to get back into the 38s would be my second entry. And I'd probably use a closing stop below 38. There's really no reason for this ETF to go back down below $38.
All right, sounds good. And let's see, next one. Actually, I remember I recommended this one in a Chart Watchers newsletter. I think it was in April. TripAdvisor, TRIP. It turned out to be a pretty good pick.
Yes.
I wish I had actually gotten in on it.
Yeah, this was earnings related. Big move up on earnings. So you got to be willing to take that risk. And if you are, yeah, it was a huge move. The stock was down below 39 before earnings, gapped up. I think the top, I would not be looking for the bottom of gap support here. I think that the top of gap is what you're going to probably see on a pullback at some point. And that right now would coincide with that rising 20 days. So if it did pull back, I really like Trip at $46 if you get it there.
Okay. And then the last one, Autodesk, ADSK. I know they beat earnings, but they're down quite a bit. Is this a time to buy? I mean, I guess in general, this would be a good question. You know, if you get the good earnings, but then that big drop, is that when you should just start looking to get in?
Yeah, I don't see any breakdown here. And they did report earnings that beat expectations, top line and bottom line. Autodesk, $559.9 million in revenues, just a slight beat. 559.4 was the estimate. But bottom line doubled what was expected, 6 cents versus 3 cents. So overall, I think the report's good. Yeah, it's down, but we're nowhere near a breakdown. I mean, I think we've got really good support here on this gap down where we rally, and then you've got gap support down right at this level. So I'm going to say 120 to about 121.5 is really good support. We could make our way all the way back down there. I would not be a buyer of Autodesk right here. I'd either wait and see if I can get that breakout over 140, or I'd be patient and try and get it down closer to the low 120s.
All right. And that is 10 in 10 minutes. Well, very close.
Close.
We're always very close. It works out pretty good. Okay. And there you go. All those symbols. I'll have these up in the Market Watchers Live chart list. And you can find that by going to the blogs tab and then clicking in the menu, the Market Watchers Live blog, and then you will find that link right there. And with that, let's go ahead and move into our final market update. Actually, after I talk very briefly here about ChartCon 2018, go to stockcharts.com/ChartCon to get all the information I am showing you right here. We are doing this online, so you don't have to travel to Seattle to see it and be a part of it. We even have social media set up so that it does feel like everybody's kind of going to the conference together. So the theme is reducing risk in uncharted waters. Highly recommend you check out the page. We have a video to give you some information about how it will work. You can see the speakers. And in addition, we have the agenda, the loose agenda for those 2 days and who is going to be talking and what their particular topic is going to be about. So there you go. I'm happy to be on the first day and get it done right away. Sorry, Tom, got to wait a little longer.
Yeah, I know. It's never fun to be the second day because then I can't have fun the first day.
I know, because you're thinking so much about your presentation. Same. So I'm glad to be going the first day, although I have to say following Tom McClellan is going to be really difficult. But I'm going to do my very best.
You'll be fine.
So yeah, it should be great. Very much looking forward to it. And with that, now I will get into our final market update. Here we go. And I did just set this up so I know it's recent. So as you can see, markets are down slightly today. The Dow is down, slightly. We've got the S&P 500 down about 7 points, 7.5 points. NASDAQ, interestingly, is spending the entire day so far, just about, in positive territory and moving, mostly consolidating sideways. But I think that's interesting. Small caps, which have been leading as far as the indexes, are down slightly, but we're definitely seeing outperformance right now in tech. today. We have the Canadian markets, TSX, had a big gap down, made a really great surge right before the program started, and now it's fallen all the way back down, but it's still higher. It's still above those earlier intraday lows, thinking maybe it will get back up into positive territory by the end of the day. We can see that the Treasury Yields, 10-year Treasury Yield, gap down, moving sideways, currently reading 2.933%. UUP, big gap up, but now consolidating sideways. Commodities not having a good day. And I'm sure a lot of that is due to oil, which is really having a difficult day. Big drop down for USO, gap on the open, and has continued to trend lower the entire day, down 61 cents USO, now reading at 1368. Gold mostly unchanged right now. GLD, we can see that the VIX, traveled a little bit higher, but we're still looking at a reading right around 13. That not very much nervousness in my estimation when you get those readings. We have XLF. I thought I would point this one out, down on the day, but hitting that support level, that intraday low. So we'll have to see if we can get a bounce off of XLF and the financials. Finally, I'm just going to go very quickly to our market, our members dashboard. And Grayson reminded me that this is where we can get some great headlines. So here we are. As far as today, these are our predefined alerts. They let us know when something interesting is going on. And currently, as you can see, tech is doing very well. We've now got a bullish percent index. Well, it's crossed below 80, but I know that we're looking at a much better setup than we have in quite a bit. We can also see the utilities sector had a bullish crossover, while financials, which we just looked at, had a bearish MACD crossover. The PMO hasn't quite done that negative crossover. And, looking at this, though, I really don't like the fact we're losing that intermediate term trend model buy signal. And with that, I'm going to conclude the final market update. But did you have anything you'd like to add, Tom, before I get into sentiment?
I would just say that the dollar again is breaking to another high today. I mean, we're up at 24.78 right now. We've been marching steadily higher. This is about 5 weeks now where we've been going up almost every single day in the dollar. And that just continues, in my opinion, to fuel that outperformance that we've seen for the past couple months in the small cap area.
Absolutely. All right. So what I'm going to go over is our sentiment. And sentiment is basically the way people are feeling about the market, if they're bullish or bearish. We have polls that are taken. In fact, I would really like for you to take the poll that is currently running. And even if you're watching a replay of this show on the StockCharts TV tab, you will see the poll. Please go ahead and take it. I'm going to turn it into the Wall Street Sentiment Survey, and we'll take a look at that at the end of this presentation. So sentiment is contrarian, tells you what people are feeling. So if everybody is feeling extraordinarily bullish, that is very bearish for the market. Typically, once everybody gets on board, the wagon, the wheel falls off, is how I look at it. So, we want to study sentiment to see where people are thinking they are at. It's similar to why we look at the VIX. We want to see how nervous or complacent people are with the market, because that gives us a hint as to what to expect going forward based on the bullish or bearishness of market participants. So the first one we're going to look at is the 10-day moving average of the put-call ratios. There we go. Let's go this way. Here we are. All right. So what I want to look for here when I read this chart, this is the put-call ratio, the 10-day moving average of it. Then we have the equity put-call ratio and OEX put-call ratios. So what I look for, of course, with most indicators, you're looking for troughs or peaks. You want to see those climactic readings and see what the market does when those happen. And what'll happen here, if we get very low readings, that implies that the denominator is much bigger than the numerator, if you remember your math. So at this point, we're seeing lower readings, and that means that we're seeing more bullishness. But what I'm also noticing right now is we're starting to see a bottom on these two ratios. And typically when we get bottoms on these ratios, it leads to consolidation or decline, continued decline or consolidation. In this case, I would look for, we're already starting kind of some consolidation here. So when I look at this chart, I would consider this, you know, investors are feeling bullish, more bullish, but we're starting to see it switch over, and that is going to be bearish for the market. Let's look at AAII investor sentiment. This is a poll that the American Association of Individual Investors on their website, and I believe everybody can take this poll, whether you're a bull or a bear currently. And they give us those results on Thursdays, which is why I do our sentiment report on Friday. And we compare how many bulls there are versus bears. And then I also have the bull-bear ratio to give me some extra information about what's going on. So what I wanted to point out today is, and you can see it especially in the thumbnail, we do have a preponderance of bulls out there feeling more bullish, 38.6% to be exact, but a quarter of those are still bearish, which leaves us, and I always kind of consider the neutral camp, the people who are kind of undecided. And right now, you know, they're more of like a third. So we've got a pretty good selection here of definitely more bulls, bears. I think it's good that we have a little bit less in the way of neutral votes, because I think when you get these squeezes on these indicators, you're not going to get as much information. It's like we look for these peaks. You know, again, climactic readings are usually the best. Right now, what I want to point out is, of course, like I said, more bulls right now, but we're not seeing that much of a difference over the past couple months, honestly. And right now, our bull-bear ratio pulled back a little bit. In fact, we're still, again, you're still looking at a ratio that's pretty high, you know, obviously one being even. So we know that there are more bulls going, there are more bulls in the market as far as our individual investors are concerned. And that tells us that we should expect, you know, that's bearish for the market. So another one that's bearish for the market, how about the National Association of Active Investment Managers? We get the report from them on Thursdays as well, how exposed they currently are to the market exposure. So it's great to see this chart to see where the big money managers are as far as their sentiment. Are they putting more money out on the table, or are they pulling back their exposure? Currently, we didn't get much of a change in the exposure readings, but we are looking at elevated readings. I mean, certainly we've seen much lower lows on these readings. So I would say I always mark the horizontal so you can see how it compares across the board. And you can see we do that is an elevated reading, certainly not as climactic as we've seen previously, but we're looking at elevated readings, and elevated readings typically mean you're going to start seeing a decline or some consolidation coming along. So I would read this chart as bearish. The last one I want to look at is our Reits assets analysis. And this chart, I think, is absolutely the best. I love looking at these Reits funds. Let me explain why. We just looked at the charts for the AAII and the ratios. But the main thing is with those others, especially AAII, it's a poll. It's a finger in the wind. Which way is it blowing? How am I feeling today? It's just a vote, right? It's easy to go in and vote, like you're going to go vote on that poll that we're going to look at shortly. So, you know, we're looking at just people and how they feel. This chart actually tells you where the money is going. And what we look at, Guggenheim has a basket of stocks. Reits used to manage them. But we look at the bear funds that are in that basket. We look at the assets in the money market funds, and then we look at the assets in the bull and sector funds. And then we calculate a ratio, the Reits ratio of the bear and money market assets divided by the bull assets to get that particular ratio, a bear bull ratio. And by looking at that, it gives us information as well on the chart. So what I look for on this chart, where's the money going? Where is the money? And currently, as you can see, we've continued to see the money market assets in decline, and we're not seeing money going really into the bull funds or equity funds, or really the bear funds that much. Those are mostly flat, although we're seeing a little bit of a rise right now in assets moving to the bear funds. And I know everybody's like, well, how is that? Well, you know, there's a lot of things going on here, but my thought really is, you know, you're seeing a lot of those assets, I think, coming out of money markets. We're getting ready to hit summer. We had tax season. I think there's a lot of reasons why people might pull their money out of the money markets at this point, but and then we have to think about valuation as well. So at this point, bull and sector funds are flat. We're not seeing an increase in those purchases or assets. We are seeing a slight increase in the bear assets. So overall, honestly, I would read this chart as somewhat bearish, neutral to bearish, but I would really look at this as mostly neutral. And when I look up here at our ratio, this is very, very encouraging. I want to see the ratio continue to rise. I think that's healthy for the market. You can see when we topped out here, we come out as we were coming out of this top, we started to finally see some movement to the upside. But breaking above the tops on the bull bear ratio, I think is bullish in behavior at this point. And so that is the conclusion of what I have. Let's go ahead and look at the poll real quick, and then I'll go through my summary slide for you. All right, so we should be, oh, there's my lovely doggies. So I don't know if we have the poll just quite ready yet, but I'm going to let you know what we're seeing. And actually, this might be a good time, Tom, to let me know what you're thinking for next week. How do you think the S&P 500 will close next week?
Oh, I hate answering about the S&P 500. I think the market's going higher, though.
In general, all right. So you're going to be a higher vote. I will tell you that my vote, based on the sentiment, just based on my indicators in the short term, I am going to say mostly unchanged. I think it's going to be some consolidation coming up this week. So let's go ahead and we'll look at that summary chart, and then we can start wrapping this up, talk mailbag, and go with that. So let's recap here for you. So the first one we looked at was the 10-day moving average of the put call ratio. We're looking at what I would consider oversold readings, and we're starting to see them turn up. And, you know, when we start seeing those bottom, that is generally bearish for the market. Investors at this point were mostly bullish. We saw an increase in the bullish votes. And that ratio is pretty high, but it's not, none of the readings are that climactic on the AAII. So I think that it's neutral to bearish really for the market at this point. The National Association of Active Investment Managers, we're looking at some high exposure right now, somewhat overbought readings. As you saw, we've had some more climactic readings in the past, but we still are showing some high exposure, and that is bearish for the market. Reits ratio, remember we had flat readings on the bear funds and the bull funds. We did see a little bit of an increase in the bear funds and the pullback of the money market assets. I think that really that chart is showing mostly neutral for the market. And so in conclusion, I would say that, you know, sentiment is leaning bearish. You know, there's bullish tendencies out there. So that tells you that that's bearish for the market. So if investors and managers, again, showing bullish tendencies, that's bearish for the market. To me, as I just said, based on my short-term indicators that I've been writing about, you can read about them in my Wednesday blog for Decision Point. They're sort of mixed right now. And so with that, I'm looking for some consolidation next week. As I said, my vote in that poll was mostly unchanged, a neutral vote. With that, I'm going to conclude our sentiment update, and we can move right on in, I guess, to our mailbag and wrap up at this point. 3-day weekend, very excited.
Yeah, we got a 3-day weekend. Of course, if you're late tuning in and not really paying attention, Monday is Memorial Day here in the U.S. So we have U.S. markets closed, banks closed, all that stuff. So we will not be here, but we'll be back on Tuesday. Yeah, I mean, what are some of the more widely asked questions of your PMO, Erin?
Yeah. Well, most of the cases, as far as my PMO and what.
I was just saying, I know that you were talking about overbought and oversold earlier. I know with like the PMO, you've talked about that being overbought and oversold.
Yes.
Maybe.
And I would say at this point, when I look at, I'm looking at my decision point scoreboards currently, and the trend in the short, intermediate, and long term, as far as price trend, is completely, everything's going up. Everything is on buy signals. The only thing with the PMO right now, as far as the signals, they're the only, what I would call sticking point. In the intermediate term, they're still reading as sell signals, but the short term and the longer term are on buy signals. And I've been watching those weekly charts, which is where you get those PMOs. And at this point, they are rising. I don't think we're too far away from those turning to buy signals. And all of these things, this is why I've been starting to move into more of the bullish recovery rally camp. I've been very hesitant through most of this volatile period, but I think we're finally starting to see all those little details that I look for are starting to line up again and get healthy. And so I'm expecting that, in the intermediate term, we will see those buy signals on the PMO.
Yeah, I'm seeing more and more of the sectors and some of the key industry groups certainly looking much more bullish, making breakouts where we've failed quite a bit over the past 2-3 months as we've been consolidating. A lot more PPOs above centerline pointing higher. I'm assuming probably a lot more of those same way on the PMO. But
yeah.
Anyhow,
I
it is
want to say very quickly too that you had one question, or not question, a suggestion for position sizing as far as reducing risk and also stops, how to deal with the whipsaw and not have them trigger and then lose out. So those were some possible ideas for your workshop next week.
Great. Sounds like a workshop. Sounds like a workshop title. We'll go ahead and we'll go with position sizing.
Absolutely.
Okay. There we go.
Excellent. There you are. And I know we do get a lot of questions about that. All right. So for next week, again, Monday is Memorial Day. Tom will do that workshop, probably with position sizing included. Mark Chaikin is going to be here Wednesday. It's always great to get a celebrity onto the show, and I consider Mark Chaikin definitely a celebrity. So I'm looking forward to that next week.
Yep.
And with that, I guess I'm going to say goodbye and have a great 3-day weekend, everybody. And Tom, take it away and close it down.
Sounds good. Yeah, Mark's always, it was great having him on the show. Look forward to that next week. Want to thank everybody for being with us today. Please remember to complete that survey as you exit. We'd love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your 3-day weekend. Thanks, vets, for all your service over the years past and present. See you back here on Tuesday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.